To talk about all things unemployment and the economy, we are joined by our A-plus panel for the day, host of Watchdog on Wall Street, Chris Markowski, columnist for the American Spectator, Jeffrey Lord, and former advisor to Margaret Thatcher and President Trump, John Brown. So we know on Friday, gentlemen, we're going to get some bad numbers when it comes to jobs. And what effect should that have at all, Jeffrey Lord? We know it's going to be bad. Should we just be looking past that? What do you think it matters?
I think we're learning to look past it. I mean, I think we can all guess what will happen. The numbers will come out. The stock market will probably tank for a bit. And then, we'll get on to the next week and we'll go on. It's a terrible thing to say, but we're learning to adapt to all of this and figure out our way through it. And so I don't think that this will be any different. We expect numbers to be bad. They're going to be bad, and we'll keep going.
Now, gentlemen, we want to show you a WebMD poll, and it walks us through, once people have reopenings in their state, will they actually go to stores? Will they go to restaurants? Will they go to sport events? And 26% felt a sense of trauma from COVID-19. 25% say they're afraid to go to the store. 15% are afraid to leave their house. And get the 77% had not sought counseling. So I guess it's showing that it's not quite that bad yet. But Chris, when you hear these numbers, what sticks out to you?
I think that, again, they're polls, and people get asked questions in these polls, and sometimes they don't give you the answer, not so much a truthful answer when it comes to these things. I really don't. I do think people have been very, very traumatized with this. If you've lost your job, if you've lost your business, this is obviously hitting you hard. And the statistics just throughout history prove that. Unemployment is a killer in of itself. So I find it hard to believe that there are people that are not that bothered with it. They've obviously got to be looking forward and thinking about what's going to be happening in the future in regards to when their unemployment is going to run out. So all of those issues are playing a part. I'd be careful with polls right now. I really would.
John Brown, does that mean that the market's overvalued? I mean, I know it doesn't represent the whole economy, but are investors being too optimistic that we're going to get back to normal?
Well, I think, as Jeffrey said, the market tries to anticipate the future, which is in unprecedented times. So it's very hard to tell both the extent of the recession or depression and the timing. What we're seeing is a battle royal between recession and the Federal Reserve Board's pumping in liquidity. But I do think that whatever happens, there has to be a time, even if the Fed keeps all these markets buoyant and up, which it's been doing for years, it's now got to maintain this bull market, this bubble. Eventually, people have to look at the earnings of corporations to justify share prices. Mm-hmm. And I think that is what is actually going to bring the market to a sort of sensible level in the end. Meanwhile, I think we're going to see price inflation even in the markets and, of course, in the economy, because we've had close to $7 trillion worth of money, liquidity introduced by the Treasury and the Federal Reserve Board combined. And that is going to build inflation that's in store. And so we're about to see a huge wave of inflation, probably beginning in this fourth quarter of this year and certainly into next year. And in that time, I think that's when people will start concentrating on real values again.
Now, Jeffrey, the GOP Senate doesn't want more stimulus. Is this smart?
Yeah, I think at this point, you have to be very careful in a crisis to have a very simultaneously bold and then measured approach. If you get sort of engulfed in the whole thing and the emotion of the moment and you overstep, particularly when you're dealing with the economy, you could really set yourself up for some problems down the road, and they have to be very cautious about it, and I think they are.
Chris, to the end of what John was saying, that we're going to get inflation back. I noticed today Treasury announced they're going to have a 20-year. I don't want to get too wonky on this, but this is the way they're going to try to raise money when it's cheap, at least from that perspective. But in order to get money, they're going to have to raise those interest rates down the road. And I think that's a scenario John is laying out. Do you think we're going to get that inflation? And if so, does that happen before people go back to work at large levels?
A lot of what the Fed has been doing so far, they haven't injected all of this money. There's the threat of them going ahead and injecting this money. We also thought we were going to get a bailout for Boeing, but because they're too big to fail, they were able to raise money at an unbelievable rate, 5% with all the problems that they have in the open market. Listen, the Federal Reserve took tools away from my toolbox going back to Alan Greenspan, where I'm not allowed to get riskless assets at a reasonable rate of return. And this has been going on forever. At some point in time, one would think that we'd start seeing some sort of inflation in there. I just don't know when. So,
John, overall, do you think the Trump stimulus is working?
It's very difficult to tell, but the word is think. I think it is, yes. The amount of money is just absolutely massive by any historical standard. And I think it, therefore, is almost bound to work in stimulating the economy. But that's the big problem. You have the economy stimulated on a false precedent, just lots and lots of money and less value. And I think the Fed is going to have a problem. I think they will keep short-term interest rates low, but long-term interest rates, I think, are going to rise. And in fact, I think there's now going to be an end to the 40-year bull market that the Fed has created in the past.
Okay, 20 seconds, Jeffrey. Do we need more money out there now from Congress?
I don't think so. I think go with what we have here. I mean, boy, they have put a lot of money on the line here.
Yeah.
That we're going to have to deal with as debt down the road.
Yeah.
At some point, you got to stop this.
Okay. All right, gentlemen, we'll talk again. Chris, Jeffrey, John, thank you very much.
Here to weigh in is our A-plus panel of the day, watchdog on Wall Street host Chris Markowski, the American Spectator columnist Jeffrey Lord, and former advisor to Margaret Thatcher and President Trump, John Brown. Welcome, gentlemen. Chris, we'll begin with you. What's it going to take to get those jobs back?
Well, first and foremost, everybody's got to get started back up, and they have to see revenues start coming in the door. Take, for instance, a company like Disney and all the people that are unemployed in Orange County. Disney Shanghai is going to be opening up this weekend, so we're going to see how that goes and how responsive people are, and that might lead us to see what might happen here to some degree. But I think a lot of businesses out there are going to have a very, very difficult time. The New York City comptroller came out today and said 1 in 5 businesses just might not be coming back.
So, Jeffrey, how does the job market change as a result of that?
Well, Chris just mentioned New York City. I worked in New York City earlier in my life, and I keep looking at these pictures of television pictures of deserted streets in the middle of Manhattan, and I wonder whether any American city is ever going to be the same again. A lot of people have learned to work from home as a result of all of this, and I'm wondering if this whole structure isn't going to be changed in some sort of massive way that we can't yet quite anticipate.
John, what are your thoughts? Will jobs look different moving forward post-coronavirus?
I agree with Chris and Jeffrey. I think things are going to be very, very different. We will have been kicked by this recession or shut down into a virtual world that we were only just skating over at the beginning. I think social habits will change. There'll be no more or very little handshaking and kissing and things like that. And that deliveries, office work, deliveries and shopping will be done increasingly on the internet and virtual delivery by drone rather. And conferencing in businesses will be done by Zoom and not meetings. There'll be less air travel, staying in hotels, that sort of thing. And I think there'll be much more homework and less commuting, and therefore some gasoline bills will be down and car wear and tear and all that sort of thing. We're entering a very different world, which is going to be highly virtual. And those that are in on it, like Zoom, like Netflix, like Google and Amazon, I think are still going to benefit even from here, even more. And of course, there will be newcomers. I think what happens in one of these destructive things, old companies die and new companies come up, filling the gaps and the new opportunities that will arise.
Yeah. Are these temporary, Chris? I mean, what's the scenario if we get a vaccine? I'm not saying we ever will, but what if we get a vaccine, we get that herd immunity, and people are not as threatened by a virus?
See, I do think it's temporary. Even I think certain people, people that have been in business in their job for a longer period of time are going to say, hey, you know what? I'm tired of that commute. I don't want to be on the train for an hour a day. Actually, Bank of Montreal came out and said today that, wow, this has worked out really well for us. Our workers have been productive working from home. So we're going to allow them to work part of the week at home. Part of the week they're going to come into the office. So I think businesses are going to do that. It's going to actually make them more profitable. But human beings are human beings. There's been pandemics throughout world history. So you can give an example. You go to Greece, and they've got an amphitheater on the side of the Acropolis that's been there since 400 BC. They had some terrible, terrible pandemics. But guess what? People eventually came back, and I think people are going to go back to ballparks, and people are going to go back to concerts. May take a little time, but they're going to get there.
Jeffrey, I have a cousin who unfortunately she lost her job due to coronavirus. She was working in construction, and now she's actually going to get a medical billing certification. She's in a sense reinventing herself. Do you think people are going to have to be flexible and willing to maybe move in a new direction as well?
Yeah, I do, and I think frankly some people will be very eager that you know, oftentimes terrible situations can turn out to be productive in terms of new opportunities for people. And I think that you know, your friend there is a perfect example of this.
Yeah.
And you know, watching people come back, you know, we talk about the herd immunity and all that kind of thing. I think getting back to work and going out to restaurants and public events and that sort of thing will sort of follow a herd instinct all on its own. A few people will venture forth, and then more people until eventually we're back to quote-unquote normal.
I've heard the term with companies right-sizing rather than downsizing, so maybe we'll get more of that. Gentlemen, Chris, Jeffrey, John, thank you so much.